Hello everyone, welcome back to Be Great Economics. This is Nate, your class leader. Let's get started. So today we're going to be going over technical analysis. This is the first part in a long returning series. We'll do technical analysis, basic setup. First we'll look at chart setup, your linear, logarithmic, and your time preferences, and set how you would make good decisions to get started with those. We'll inform you on the simplicity of just assigning trend lines for support and resistance, and then we'll go over some of the most basic common formations in technical analysis. I will definitely say that these initial foundational pieces are absolutely key to, and you'll have to continue to familiarize yourself with recognizing these in order to improve your understanding of charts and price analysis, trend analysis. So I will say that there is a divergence in the agreement on whether or not charting is valid. Those that use it stand by it. Those that don't disagree with it. Most of the evidence has been a little mixed, stating that the statistical evidence on formations and patterns seems to come through, but the performance of actually using chart data seems to be a little mixed. I personally have had good use with these, and I find that no matter whether you're going to trade or invest long term, understanding price momentum and how that is playing into recognizing mania in a chart or recognizing undervaluation in a chart is almost as valuable as being able to read a news article about a certain product or company. So let's get into that. If we go into the upper left-hand corner, you see ticker symbol, the menu, the chart type that we're on, which we're currently on a line chart. This is the most basic charting format. It's just to see what price has done. The time frame is where each unit of data point is from. So at the close of each unit is where they mark the line. So this is on the weekly, meaning on Sunday it closed, and so it'll reopen on Monday. That's the standard. In obviously the stock market, it's opening on a Monday, closing on a Friday. And then over to the left, we have menu for tools that we will use in order to identify trends in the chart. And there's a lot of other advanced tools in here that we will slowly become more familiar with. We're going to keep to the basics now because we're mostly learning about investing on a broad scale, but I do want to start bringing these tools in because it takes time to learn and familiarize, and the better you get with them, the more confident you become with how they function. The timeline is on the bottom, and you can see that it offers you to be able to change the time frame that you're looking at, and then this is measured in years, and as you zoom in and out, it changes from years to months to weeks. And we have a scale ratio on the bottom right corner. The bottom right corner scale ratio allows you to select whether it's on logarithmic or on the automatic linear progression. Linear progression is how we receive price over time in normal single unit count, as we've talked about logarithmic trends before, where it's multiples instead of single increases. Our scale is on the right hand side, our price scale, and then you can see the actual price that it's listed for in the upper right corner. Sometimes it's the lower right if the chart is down. And the unit of measure that it's being used is US dollars in this case. So you would make sure that these are set the way that you want, because you may want to use different units of measure. Sometimes you'll measure things in different currencies, for example. When you talk about linear versus logarithmic, this is the same chart but on log scale. It's just showing you that in multiples it forms different channels. So sometimes when you're looking for a trend, if the chart has been constantly increasing in a format of multiples, turning it into logarithmic helps you make sense of the chart, so you can start to see a trend emerge, and then it's easier to draw trend lines, because if it's moving in an arc upward, it might be hard to draw a trend line, but if you put it to logarithmic, you can say, oh, okay, it's still responding to price, it's just responding to price multiples. When you're selecting a time frame, it's important to know what you're looking for. This is the NASDAQ, and if you look at it on the monthly scale, back in the dot-com bubble of 1995 to 2001, you can see the cycle for boom and bust, and then it moves back into a boom in the long term. This can help you set trends that are important. However, if you look the NASDAQ again at a most immediate current pricing, it's on the, I think this was the minute scale, and it might have been the 5-minute scale, but you can see that these tiny little micro movements are really nothing. You're talking small sub 1% moves, and it's just not enough to give you really good data. If you're a day trader, you're more interested in this information, but at the same time, you're getting into a position and getting out of it within a day. If you're looking for long-term investments, you need to open up your horizons, and I would say in most cases you need to zoom out. If the product and the or the investment vehicle is a good investment vehicle, it has a long time horizon built into it, and so you need to zoom out and get a big picture and stop worrying about the small volatility and get into the bigger picture. The S&P 500 here shown is basic trend lines drawn. And so what are trend lines? Trend lines are support and resistance lines that the price moves along in a trend. So the support line is where price or the trend price, the price or trend has price move above it. I apologize, I wrote that note poorly. The resistance, the price or trend price moves below it. We see that the price moves above the support and below the resistance, and then it can flip resistance into support, and when it fails, it flips support into resistance. So it responds in different ways, and this helps you kind of identify where your risk lies. And we can see that we followed resistance back in 1989 on the S&P 500, and we hit it, we came back down, we broke above it, and then as you move into 1990, 1991, we just had some sideways volatility. But remember, this is over 1 week indicator periods. So for more than a month, you were falling from the end of 1990 into the mid 1991. You would have spent your time going, oh no, it's crashing. But remember, you had this support and resistance. So when you broke a support line previously, you could have identified that it was going to continue to go down. But once it found support, you could say, okay, it's going to reject from here and go back up towards resistance somewhere. It continued to move up. It found its way up. It got back onto support, and then it worked its way into these other channels. And then we have an ascending one, just as an example. You can see that there's ascending channels. Sometimes it'll break, and it's called a false breakout. It will break below or above, and then it will continue back into the normal channel. And so you sometimes use other support lines to help remind yourself of where the risk really lies, because it may hit that support line but then come back off of it. Common formations also include the channel, as we saw in the previous one. All of these are technically forms of channels, linear channels and ascending and descending channels. These just allow you to identify where the support and resistance play between. Usually they're in a parallel format, and this allows you to identify where the next move will be. As we talked about our trade, it was the NASDAQ is in a channel, and we were playing a trade within the channel. Some other common formations are a flag. It's a channel at the end of a price movement. You can see that it goes up. You look at December 14th, 2020. This is the Bitcoin price. It jumps up. It moves into a channel sideways, but it's in an ascending channel, so we say, oh, this is a bullish flag, and then it eventually breaks above the channel. Then we also see a cone here. A cone is a triangle that doesn't close on the end, and it moves along inside of the cone. It can either taper inward or outward. Widening cones are usually not as good. They usually mean something bad. Tightening cones tend to be a coiling of price, which means there's more volatility coming to most likely the upside. Here's another common formation. This is a pennant. Pennants are a type of cone that tapers to a point. Approximately the statistic is 74% of the length of the cone, or the length of the pennant, is where the breakout occurs. So in this case, this was a bullish pennant that became another bullish pennant that then jumped up into a flag that is currently a bullish pennant. And if you look at the price right now, we're actually above this bullish pennant. We're at like 62,000. So just to prove the point, it leaves a little gap at the end where it tends not to go to. It's that last 26% that it tends not to fill, and then it goes above it. So it does generally work. These are very great in bullish trends. On downward trends, they can kind of flip both ways, so they're a little less reliable, but on upward trends, they tend to perform well. This is another common formation that people will bring up a lot. I find that it works more on a macro scale. The evidence for statistical performance tends to apply more on a macro scale. On smaller scales, like on the daily or hourly, they tend to come up a little weak because when you're looking at these for short-term trades, they're just not. They don't have the momentum built into them the way they do um, into the long-term trend. So when you're using these, just take it with a grain of salt that they are more a 50-50 shot of succeeding when you're on the smaller scale. When you're on the larger scale, they have a much higher chance of being accurate. And so we'll look at Bitcoin over the past few months. You can see a cup and then a handle formed in summer 2021 and ending into the fall of 2021. This would mean that the trend should be moving upward, which again, we are above the 61,000 price. We are at 62. I get the feeling we're going to go much higher. The measure for a cup and handle formation is the jump from the handle will ideally be the length of the depth of the cup. So that means that the price in Bitcoin went down $35,000 approximately. So it should move up from the handle, the breakout from the handle being $62,000, should move $35,000 from there. That's just one momentum move. That doesn't mean that another move won't follow. But this is just something interesting to learn about how cup and handles should work. We'll see what actually occurs, so you can actually follow along after this video on whether or not it actually occurred that way. We see gold on a macro trend. This one is on the weekly scale, and it's over the past decade. And you can see that it's formed its cup and handle. People are very bearish on gold, but the point of it is to shake out people after this upward trend. And when I say the point, it's not that it intentionally is necessarily executed, but that it's the way that the market responds to a massive upward trend is a little bit of a downward retracement before it takes off again. Coiling is important because it shakes out the hands that it increases the people who would bet against it, and it decreases the hands that are actually holding, but allows an opportunity for those that want to see it increase to stack more. So it brings those who believe essentially with it. It's just kind of an interesting function of markets, is that the supply decreases as the price goes down because it becomes more affordable. So again, follow along with our logarithmic factorial progression where we're going to double our money. I will say that today one of the two options calls that I made went through and closed. We are at $1,998. So we are basically at $2,000. The other one did not close. It was off by $5. For its auto sale. And so what I'm expecting is that on Monday it'll probably make it back. But we're going to call it as we actually functionally did do this, but you haven't realized gains until you sell. So I will actually post a video to prove that it's been sold, and we'll talk about what our next option will be. I'm thinking it's going to be in the silver market. I am avoiding crypto here because it doesn't offer the leverage that I'm looking for with options trades. We might get a double, but we also have to sit through a little more of different volatility. We can't measure it in shorter periods of time. So following along with the syllabus, next we have risk, outcome, and asymmetry coming up in our following episodes. I've prepared some of these, so they should be posting shortly. Again, follow me on Kobe.io if you want to see an actively managed account play out and see if I can actually beat the markets. So far, we're a month in and I'm up 1%. So that's pretty cool. Thanks for watching.